But Josh, do we agree with Cramer that in terms of, the mega caps, they were up so much? And you can love all the names. I mean, it's not like you're throwing shade on any of the names or the fundamentals behind it. But when an Apple's up near 50% and Microsoft near 60, Alphabet same, Amazon 80, Nvidia and Meta, as you know, up just astronomical gains of last year, are the multiples now, in his words, out of whack? Do you agree with that? And is it time to trim across the board?
You can't argue that Apple is cheap based on its own history. You can't. I don't hear any Apple bull saying the stock's cheap here. That's not the argument for owning it. The argument for owning it is you've got a ton of stability. You've got just insane, in dollar terms, amounts of cash flow. You've got the ability to buy back stock. And you have this wild card where when they launch the wearable, if it turns out that that's the dawn of a new era of hardware, maybe a lot of people who have been out of the name will have to take a second look at it. That's the bull case for Apple. The bear case is simple. It's a 30 trailing PE, a 27 forward PE. Look back over the last 10 years, it averages 18. So it is almost double its long-term average multiple. And it's really easy to make the case, to Weiss's point, hey, I don't owe the taxes anymore for last fiscal year. Calendar rolls over. Maybe I'll take some off today. And the downgrade, I think, was perfectly timed to coincide with that. Mm-hmm. And I would also argue, welcome to the new world. And in the new world, the activity of retail buying and selling almost doesn't matter in terms of day-to-day moves in the market. What moves the market is basically three categories of things. Number one, RIAs, the wealth management channel. It's 15,000 firms now managing a record $114 trillion with a T dollars. And what do they do at the start of every year? The centralized CIOs who control that amount of money, they do a rebalance. And what do you think they're going to do? The NASDAQ went up twice as much as the S&P last year. That's an obvious trim of NASDAQ, maybe add of Dow. And I think you're seeing that play out. Look at life cycle funds, another $3 trillion bucket of assets. What do you think they're doing? They're doing these same kinds of year-end rebalancing going into the new year. The other category I think is worth pointing out, 401k assets. You'll see a lot of the large 401ks automatically do these types of rebalancing trades. So it's not a shock after one of the best years ever for NASDAQ. We see NASDAQ names leak on the first day of the year. People put off paying the taxes, and rebalancing is happening system-wide.